Welcome back to The Dive. The U.S. economy added 467,000 jobs between mid-December and mid-January, according to the Bureau of Labor Statistics. And our guest today is here to share his thoughts on the recent employment situation summary, as well as oil, tech winners, gold, silver, Bitcoin, and his current favorite trades. He is the president and chief market strategist of InTheMoneyStocks.com and one of our regulars here at The Dive. Gareth Soloway is joining us today. But before we bring you Gareth's interview, be sure to go ahead and smash that subscribe button for me, please. Hey Gareth, welcome back to the show.
Hey, thanks for having me back. It's always fun.
Yeah, thank you so much for joining us again. Okay, so let's start with the January jobs report. In the US, job growth rose more than expected. Do you think that this serves as an indicator that the economy could start to roar back?
That's a good question. So I think for me, it's kind of looking at the situation, right? We had this Omicron variant that was really pretty powerful with cases, but at least on the ground, and I was out and about in Florida here, it didn't seem to slow down the economy. People still wanted to be out and about. Maybe they were being a little bit more careful, but for the most part, I think the analysts were thinking that it would slow the economy more than it did. So I'm not sure if it's really a bullish sign for the overall continued growth of the economy or just a signal that the Omicron variant didn't slow the economy down like the analysts thought and the economists thought it would. So I'm in the camp that I think you still see growth in the economy for the remainder of the year. I think by the second half, it's going to start to slow. Especially due to market volatility, market declines, and then the Federal Reserve, again, raising interest rates and doing what they're doing. I do think that's going to have an impact by the end of this year on growth in the economy.
Mm-hmm. Now, oil prices rose to a 7-year high, near $93 a barrel. With geopolitical tensions, cold weather, and the supply chain crunch, where do you think oil is heading?
So this is a good one, right? I'm really happy you asked about this because if you look at my chart, and I actually initiated a big short position, added to a short position, in fact, on Friday in oil, because I have a major trend line here. Look at this trend line. If you connect this pivot high going back to early 2021 here in May, and then again in September, and look at what price just tagged. And what you can see here is that we are seeing price pulling back just a little bit. But what I like about this chart is notice the first pullback was smallest. Second one, second biggest, third one, even bigger. What that implies to me is this one should be the biggest of all. And again, the target here is kind of what we call a megaphone. And you should actually head down to this trend line. And again, what you end up getting is this kind of ups and downs against the support and resistance line. So going back to oil, a lot of people will say, well, why do you think oil is going to go down if the economy is so strong? And it's going back to what the Federal Reserve is doing. So the Fed is trying to cap inflation. So number one, they want oil to come in. Number two, President Biden wants oil to come in because he has the midterm elections in November. Number three, if the Fed is really going to raise rates and continues to taper and maybe even reduce their balance sheet, that will have an impact on the economy, and you may get a slowing demand in oil throughout the second half of the year. So in the short term, I think you're going to get a pullback. In the second half of the year, I actually expect an even bigger pullback, maybe back down to the 50 range.
Okay, wow. All right, so let's move on here. What about the big tech winners this earnings season? What are you seeing from those charts?
Yeah, so that's really interesting. So we've seen Facebook get clobbered. We've seen Amazon rally to the upside. Here's a chart on Facebook, right? And one of the things that's catching my eye is this trend line on Facebook. And again, price is now coming into this level. So this is a major support line on big cap tech, at least on Facebook. I'm actually a buyer of Facebook down here for at least a technical retrace. I think it could easily go back to $260. But again, anytime you have a trend line where you're going to the pre-COVID highs, and that's what this is right here, folks. Here was just before COVID. Here was your COVID dip. And then this was the result of everyone staying home and basically being stuck on Facebook, as we were locked down. So the idea here is that Facebook has done a round trip getting back to that pre-COVID level. So on a technical basis, you would assume that you'd have technical support here, and the valuation again is starting to make sense even after their poor earnings showing. Now, again, other charts out there, kind of interesting. If we go to names like Google. We saw Google have a pretty good earnings report, right? But one of the things that concerns me about Google is that it briefly opened after earnings above that line. And since then, all it's done is sell off. So it wasn't able to hold the breakout as it peaked above. That's generally a weak technical signal. And then let's just take a look at Apple, right? So Apple's one of those that had a slight gain on earnings. But again, same thing here. As of now, you could make a case that you're making some lower lows here. So again, potential lower lows. You can see you almost have parallel lines right here. So I would say this, Facebook for a technical bounce based on the major support there. But overall, I expect more weakness in technology stocks over the next 6 to 12 months. Again, this is contingent on the Fed continuing to basically tighten by tapering and raising rates.
Mm-hmm. Okay, so let's move on to precious metals. What are you reading on the gold chart?
Gold, one of my favorites. In fact, I continue to be in the camp that I've said, as I said, I think even the last time we were on, gold to me is going to be the best performer when you look between Bitcoin and the stock market, and gold will be the best performer. Now, it hasn't moved a whole lot over the last, really. If you look going back to April of 20 or June of 2021, it's almost non-existent, but the bigger pattern here on a technical basis is a bullish consolidation. And to see that, what you want to do is you want to zoom out to basically 2018. And this gives you a better perspective of what the chart's doing. So you had this big move up from 2018 to 2020. And then since then, you've really just gone sideways, right? And that's actually bullish. You've seen Bitcoin go to all-time highs, which took a lot of money away from gold, you could argue, but that didn't really crash gold prices. It's actually held up. That tells me institutional money and smart money is accumulating gold. And again, I think I talked about recently and in the past interviews is how if you look at the 70s, the 1970s, the mid 70s to 80s, the inflation period then is kind of closest to what we're experiencing now. And what's interesting is that in 73 to 75, you had a big move up on gold, just like you had from 2018 to 2020. And then from 75 to 77, you kind of did the same sideways to lower trend before having a monstrous breakout on gold that really saw gold go up multiple hundreds of percentage points between 77 and basically the early 80s when that inflation was nuts. So I'm really thinking that that's what we're seeing here is that we're seeing this consolidation before a bigger breakout. And I do think that's going to happen.
So silver seems to be having more social media traction these days. What does your read on the silver chart?
So silver is another interesting one. It's been chopping sideways just like gold. In the longer term, I see continued upside in silver. The shorter term, again, I have a little issue with knowing whether or not it's got a little bit more downside first. So if we look at the chart here, you can see that it's had a beautiful kind of same flag pattern. You can see right here, if we draw trend lines across, sideways consolidation from this move up. What's the only caveat to this is if you go below 22 on silver, there's another major support right around 19. And the only way we would get to that is if you saw kind of the economy starting to slow pretty rapidly. And then at that point, the industrial demand for silver could slip a little bit. Overall, you're talking about a small potatoes, right? We're at $23 on silver right now. 19 is my max downside. So upside, I think that within a couple of years, you're probably close to $50. So again, I don't know if it's worth squabbling or squabbling over, such a small potential downside, but just be aware that the silver trade is partially industrial plus a store of safety versus gold is kind of your pure, inflation play.
Mm-hmm. Okay. So we also have to ask you about Bitcoin. It's had a rough start to the year, which you kind of called. What are you seeing on the charts now?
Yeah. So what's awesome is I called the down move. I still remember vividly in October and November talking, to people and trying to convince them that Bitcoin wasn't going to go to 100,000 and that it was going to head lower. And sure enough, we saw 33,000 a couple of weeks ago. Just last week, I started talking about a breakout to the upside in the near term. And what people need to understand is that in bear markets, you have these kind of rip your face off rallies, which are just, big moves to the upside. And we did see that. So you could see this downsloping trend line, beautiful orange trend line on my chart. And you could see that we broke through it and then look at the move since then. Now, the problem I have, and basically I was long Bitcoin down here, and I've actually unloaded half of my position in Bitcoin just above 44,000 today. But the key is that we're starting to come into a new resistance level. So what I'm going to do is I'm going to draw a very important trend line right here. All right. So this is really important to pay attention to for those of you that are long Bitcoin or considering buying in. This is resistance, right? So this is basically the neckline of a head and shoulder pattern. And I can draw that in pretty clearly right here. Okay. And you could see you're coming back to that resistance line. And so that is going to be resistance. It's between 45 and 46,000. I will unload the rest of my Bitcoin long into that. And then I actually expect it to even go back down and even make new lows. So I still have a target in this bear cycle for Bitcoin of 20,000 or sub 20,000. But as a swing trader, you can play these big bounces if you can read the chart. So again, wild action on Bitcoin. I love the price action. The macro, the longer term projections, I still think it needs to get a washout below 20,000. But in the near term, again, you can play bounces like I did here on Bitcoin.
Definitely. Okay, so where are you seeing your favorite trade setups for the year?
All right, this is where it comes in fun, right? So number one, gold and gold miners. You know, I continue to be in the camp where we've clearly seen that when the stock market is declining, gold maybe isn't ripping to the upside, but it certainly is a safe haven where you're getting protected, right? So I do think it breaks out at some point here. So I think it's even a more positive than what we've been seeing. So I think gold and gold miners are a no-brainer. Even silver miners are a good place to hide as well. And I also think, again, look for places that big money is going to go to. So during COVID and even pre-COVID, money flowed into the US because the Fed was so print money happy. They were just printing tons of money. Money came into the US as being the strongest, economy in the world, essentially. And that money is now, as the Fed tightens, going to look for other places to invest. So I'm still in the camp that China looks interesting to me. South America looks interesting to me. I think KWeb is a great investment if you understand the risks of China with being an internet ETF. So the Internet China ETF right there. And I think even the EWZ, which is the Brazilian ETF, that's a very, very interesting play as well. But I'm definitely, the US stocks have had so much attention, so much money flow for so long because the Fed has been all about printing money and inflation has been sub 2%. It's not the way it is anymore. Investors need to understand that and then expect a little rougher time in the US, but money is going to go to other economies in the globe that generally will be more lenient on money printing.
Okay, interesting. Okay, so one more thing before we let you go here, Gareth. Where can our audience go to get more of your commentary?
Awesome. Thanks for asking. VerifiedInvestingCrypto.com is my website for cryptocurrency trades and daily videos that I put out. Lots of education, lots of trades. We closed out a bunch of winners today. I launched it in November. We've only had one loser since November and about 25 winners. So it's an awesome swing trade service in crypto. And then InTheMoneyStocks.com is where I put out my swing trades on stocks, gold, and other things as well, inclusive with a daily video as well.
Perfect. Well, thank you so much for joining us again today. It's been a pleasure as always.
Always a pleasure. Thank you so much for having me.
Thanks so much for watching today. We'll be back again tomorrow with more great interviews, so be sure to stay tuned by hitting that notification bell and subscribing below.